So if you look at the overall story, really interest rates will impact the market in a very significant way. And the question is where they are going from here. We know that the Bank of Canada actually cut interest rates in January, and the people are basically speculating about the possibility of another cut. We have to remember, but when it comes to the 5-year rate, to the 10-year rate, what counts is really what the Fed in the US is going to do. And the Fed would like to raise interest rates simply because of the fact that interest rates there are way too low given where the economy is. Therefore, they would like to raise interest rates, but the risk is, of course, that they will kill the recovery. So they are facing a dilemma. Therefore, the likelihood is that the Fed will start raising interest rates very, very slowly, let's say moving by 25 basis points in September or December, and then they will stay there. If you look at the Fed, the trajectory when it comes to the actual increase in rates will be much, much more gradual than we have seen in the past. In the past, we have seen a significant increase in rates in a short period of time. This time, it will be a more step-type trajectory. The Fed will go by 25 basis points. They will rest. They will go by another 25 basis points to see how the market is reacting. The goal here is to make sure that the market is not reacting in a very significant way, and the 5-year rate and the 10-year rate will go to the sky. That's basically what the Fed is trying to achieve, to raise interest rates without raising interest rates. For us, this is very important. That will prevent the 5-year rate from rising very significantly. So the Fed would like to engineer a very gradual increase in rates that will impact the way the mortgage market in Canada will react. We have a situation in which regulators like OSFI is trying to basically reduce the risk level associated with the mortgage market. Therefore, they basically reduce the ability of lenders like big banks to lend to, say, new immigrants or self-employed. That's okay. The issue is that those individuals are going elsewhere in order to get their credit. So we see the rise of the unregulated market. So it's not really a zero-sum game. We are transferring risk from the regulated segment of the market to the unregulated segment of the market. This is very, very important because the risk profile in the market is actually rising. By how much? The subprime market in Canada is now rising by 25% a year. This is a very fast growth, given the fact that the market as a whole is rising by only 5%. So clearly, they are gaining market share. That's the bad news. The good news, that this market is still only 2.5% of the market. It's still a baby, but this baby is growing up very, very quickly. So if we don't wake up, in 10 years from now, the subprime market will be way too large. Therefore, what I'm saying, we have to regulate not only the institutions, but also the products.